5421, what I have, the Google chart. It is a daily. It's testing the 20-day simple moving average right here. That's that purple line. And we're testing that so everyone knows. So it did have a bounce. Uh, the high of the intraday morning gap was 2331.99 and the low was 2256. Yes, 2256.68 cents. That's exactly what it was. Volume was a little over a million shares. Now, when it comes to options trading, go ahead and sign up for the free trial. One thing about Google is if you take those lows and you do the dollar bounce, it was very nice, and it was. So that is a very nice low for today's bounce from 2256. Okay. And nonetheless, the overall trading range was $86.40 intraday, and it was. And the last print of the day was 2300. That is the last print, 2300.17 pennies on 2.24 million shares traded. So, or you can figure it minus 1.83%. Remember, when there are corrections that happen in markets, the trends are very strong for the length of time. You take that into consideration when you're pulling back to moving averages. One of the negatives, though, is it has a slight daily sell signal, and the reason why is because the trading range was $86.40 intraday today from the top down, and then you had the bottom there, and so it was very impressive, and whatnot. Um, 40 plus odd dollars, you can't complain with that. So every time it does bounce off of support, is what I'm getting at. And the option liquidity is there in trading the options, and that's where we come in. Okay. And you join the live trading room, and that's all you got to do. And we get to know each other. And then from there, everything just will happen. So let's start there. And not only that, Google has had a major pullback post earnings, and the earnings high on Google, okay, which was a week ago Tuesday, as I recall, 428. 2431.38 cents was a high, and the low was 2353.22. Okay, so it opened at 2409 as it did, and it closed at 2367 on that day when we made those highs. So you do the math. You take that 2431 and then you take today's low of 2256 and subtract them, and that is going to give you your dollar point pullback to these moving averages and whatnot. So the future sold down really hard. Now you want to have the call side of the market. So if there's a gap, you want to sell the calls, and if you're in the puts, well, you stay in them because it still has the daily sell signal, and it's always confirmed when a trend starts to make a change. You start with the gap down like this right here, and you do. So this is the part that we just want to emphasize and whatnot so that everybody is clear. And then you can't say that the trend reverses totally until you get back above this high, previous day's high of the day. And you would have to come back up to this. That's why we have the call side of the marketplace, and we do. So one thing about trading these options, the liquidity is very fine. at its entirety and whatnot. So here are the calls and the puts. The puts for May 7th, short term, if there is more volatility in this NASDAQ 100, the 2400s are the ones to have. Okay. Then the call side, when we were down at the lows, the 2250 calls that go out to May 14th, that's these right here. And so by having those calls, to have the calls in case there's upside volatility, as generally there always is, 2250 calls right here, okay? And there was only 23 contracts that were bought at this strike price, and that was the low of the equity price that I showed you over here, today's intraday low in that test. And then you had a big bounce, okay? And then if the bounce fails, then the $2,400 puts are in play for May 7th, which is Friday. And that's these contracts right here. Okay, and there was 27 traded on this side. And on the call side, up and out of the money, well, 2,400, I don't think so. This is in a reversal trend at the moment, but the 2250 calls is the one that does make the money. And buying up and out of the money, you can make money as well. But remember that the premium you get back isn't going to be as big in dollar terms and price as when you're deeper in the money. Okay, whether you're buying on the call side or the put side of the option market. Take that free 5-day trial. Let's get rolling. That is the setup.